Hello and welcome to the AJ Bell Fund's quarterly update. On behalf of the investment management team, I'm here to run through the macroeconomic events that have helped to drive performance in the AJ Bell Funds across the second quarter of 2021. The story of lockdown in financial markets has been of winners and losers in different industries. Many companies that were well positioned for changes to working life and consumer habits, for example technology stocks, did very well through the first lockdowns of 2020. More recently, as business activity has resumed, stocks in industries that are sensitive to the economic cycle, such as energy and retail, generally saw a recovery in their share prices. As inflationary pressures started to bite at the beginning of the year, this pushed these shares up even higher. However, although the spectre of inflation still looms, central banks have shown more willingness to take action in recent months, with the US Federal Reserve indicating they could introduce measures to counter runaway inflation. This has also had the effect of stabilising bond prices throughout Q2 2021, following a large sell-off at the beginning of the year. While bonds have posted a positive total return this quarter, they have underperformed global stock markets, as investors moved money into riskier assets. Despite the end of lockdown restrictions being delayed in the UK, this has not seemed to dampen investor optimism, and many of the fundamentals that we see driving markets seem unchanged from the start of the year. As a result, we have not made any changes to the funds this quarter, following on from the annual review in February. At the end of last year, we also launched the AJ Bell Responsible Growth Fund, which we are pleased to say has attracted a lot of interest. Investing with environmental, social and governance credentials, or ESG for short, has become a hot topic in investment management recently. At the G7 summit in Cornwall this June, the world's leading democracies committed to the bold ambition of building back better in the wake of the COVID-19 pandemic, promising international investment in green infrastructure projects and climate change initiatives. These regulatory tailwinds should make the investment case around ESG more attractive, as well as the increasing awareness of these issues and demand from customers. We are pleased to see all funds post positive returns in the quarter. This adds to positive returns seen across all funds in the 12-month period. In addition to this, across 3 years, all funds have placed in the top half of their respective investment association sector. The investments team continue to monitor the market for any changes and new products. Thank you for watching.